Good afternoon, everyone. Welcome to today's Charity Village webinar. We will get started in just a moment. We just want to make sure that everyone has a chance to join us before we begin the session. We have people tuning in from across the country today, which is excellent. So nice to have all of you here. And with that, we will go ahead and get started. Welcome everyone to today's Charity Village webinar. My name is Mercedes and I'm the Marketing and Communications Manager with Charity Village. As we are gathering here on a virtual platform, it is important to acknowledge that each of us is joining this webinar from the ancestral or unceded lands of the Inuit, Métis, and First Nation people. I'd like to acknowledge I'm speaking to you from the traditional, ancestral, and unceded territory of the Anishinaabe, which includes the Ojibwe of Fort William First Nation. Please join us in a moment of reflection as we recognize the Indigenous peoples as the stewards of this land. Let's acknowledge the mistakes and harm in our history and the ongoing injustice, and contemplate tangible actions each of us can take to move forward in a spirit of truth, reconciliation, and collaboration. For those who may be joining a Charity Village webinar for the first time, Charity Village is Canada's largest online job board for the nonprofit sector. In addition to our online job board, organizations can also post volunteer positions. So if you're looking for work or to recruit talent in the sector, Charity Village is a great place to start. We also have a ton of excellent resources for nonprofit professionals, including online courses, articles, fundraising tools, and free webinars like the one we are presenting today. Before we start today's webinar, I would like to quickly run through some housekeeping items. You may have noticed when you joined the webinar that you were automatically put on mute. Since we have hundreds of participants in today's session, it is important for us to minimize the amount of background noise so that everyone can clearly hear the presentation. But you can still ask questions and make comments using the question box at the bottom of the Zoom control panel. Look for that at the bottom of your screen. You can also email your questions to webinars@charityvillage.com. We will be taking questions at the end of the webinar, so please submit your questions as you think of them, and we will do our best to get to as many as possible. If you happen to encounter any technical issues with the webinar, whether through the presentation or with the audio, please let us know in the question box or by sending us an email. We will do our best to get any technical difficulties resolved as quickly as possible. But in a worst case scenario, please remember that we are recording today's webinar and we will send you the full recording by email tomorrow. So if you get called away or disconnected, you will still be able to view the full presentation. Now I would like to welcome one of our presenters for today, Omar Visram, the co-founder and head of growth at Enkel. Welcome.
Thank you, Mercedes. Thank you everyone for joining today. Today's topic is cash flow clarity, real-world expense strategies for Canadian nonprofits. Let's jump in here. Our speakers today are myself. As Mercedes mentioned, I am the co-founder and head of growth of Enkel. We have Shirley Wolf, who is a CFO here at Enkel and works with many of our not-for-profit clients. And then we have Ravi Verpal, Senior Financial Advisor here at Enkel. A little bit about Enkel. I co-founded Enkel in 2016, really with a simple problem in mind. And that problem is that you can't build a great organization without good books. Fast forward to today, we have 300 clients across Canada. We've worked with over 100 not-for-profit and charitable organizations. Our core services are financial operations, which include bookkeeping, payroll, and more. We also provide strategic guidance, which includes CFO and controllership services. I would like to acknowledge that our offices are situated on the unceded traditional territories of the Musqueam, Squamish, and Tsleil-Waututh nations. We are grateful to live and work on these lands and recognize our responsibility to learn from and respect the Indigenous communities whose stewardship continues today. At Enkel, we're committed to ongoing reflection and learning as part of our journey towards reconciliation. So really quickly, this is why we're talking about, why we've selected this topic today. These are really the headlines. First of all, many NPOs are technically on budget, yet still struggle to pay the bills. Secondly, unpredictable grant timing versus fixed payroll obligations causes a lot of anxiety and stress. And thirdly, and this is the most scary one, but that phone call that every executive director dreads. We can't make payroll. So let's talk about how we can address these matters. What you'll learn today, first of all, we will help you identify and fix expense management challenges. We will help you build and use a rolling 12-month cash flow calendar. We will discuss how to spot invisible but costly spending issues. We will help you improve financial accountability across your team. And finally, we will help you use tools to automate and govern spending effectively. Let's start with a polling question. Which of the following is your biggest challenge when it comes to expense management? 1, unpredictable grant timing. 2, lack of visibility into spending. 3, inflation outpacing growth in revenues. 4, no clear roles or accountability in the expense process. Or 5, none of the above. Let's see what you have to say. All right, so I'll just quickly read out the responses here. 38% of you said unpredictable grant timing. 13% said lack of visibility into spending. 30% said inflation outpacing growth in revenues. And 8% said no clear roles or accountability in the expense process. So the good news is we'll actually cover those first 4, and 11% of you said none of the above. Interested in what that 11% might include. Hopefully we can learn about it as we go through. Let's carry on. Shirley, over to you.
Thank you, Omar, and good morning and good afternoon to all of our participants. It's great to be with you today. So I was recently reading an article entitled Innovative Resilience in CPA Canada's Pivot magazine, and it included a quote from Hemingway that gave me pause for thought. The quote was gradually, then suddenly. The suddenly phase is certainly true of much that has happened in our world this year, both economically and politically, and the disruption that it's caused for so many businesses, not-for-profit organizations, and individuals. The quote also seemed to be particularly appropriate as I reflected on a not-for-profit organization that's recently announced that it will discontinue operating. And I was reflecting as well on the circumstances that led to this decision, and some of which I've included on our next slide. So over a period of time, this particular organization was strapped for cash, and its accounts payable often exceeded its cash and accounts receivable balances. There were significant concerns about having enough cash for the next payroll run. And while the signs of financial difficulty were present over about a 2-year period, the end did seem to come suddenly. So what went wrong? Firstly, there was a lack of expertise, financial expertise, on the part of the executive director and the board. And this led to a lack of understanding of the financial statements, the big picture financial condition of the organization, and the actions that needed to be taken. There was poor visibility into the cash flows of the organization because the timing of the receipts and the payments were not being monitored and managed. Most of all, the organization's revenues were restricted to specific programs, and the funding allocation towards administrative expenses were not enough to cover all of the non-program costs. The organization also didn't have sufficient unrestricted revenues to cover those excess operating costs. And the organization ended up contravening several funding agreements by dipping into restricted funds to pay their bills. So what could have been done to prevent this? So I would have started by having the right level of financial expertise within the organization, and particularly at the executive director and board levels. Many boards that I've worked with have an annual process of reviewing the skill sets of the board members, and if there are gaps in financial expertise, they would recruit a CPA or someone with seasoned financial experience on the board. Training for the board and the executive director can also enhance their understanding of the financial statements and how to interpret them. Acceptance of the problem and agreeing that the status quo could not continue was also key for this organization, but unfortunately it took valuable time. The executive director realized that there were gaps in revenues, but didn't take the opportunity to engage others to develop some innovative strategies to generate new sources of revenues. Some steps were taken to trim costs, but the difficult decisions were delayed, and those were the ones that could have made the most impact for the organization. So unfortunately, these measures were too little, too late. Also, regular monitoring of the financial condition of the organization was essential, but lacking. The warning signs were there, but the executive director and the board could not fully understand and interpret them. Key performance indicators, or KPIs, would have been a helpful tool to flag the issues needing attention. And over the next few slides, we're going to review 4 KPIs that you might find useful in monitoring your cash and expenses. So first is the program spending ratio. This is calculated by dividing the organization's program expenses by its total expenses, and it measures how effectively the organization is using its resources to achieve its mission. The target ratio is in the range of 65 to 80%. And in the example on the slide, program expenses represent 70% of the overall expenses, which is within this range. So conversely, non-program expenses represent 30% of the total expenses of the organization. And organizations will need to review the adequacy of unrestricted revenues to cover these expenses, or to take steps to reduce the expenses. The next KPI that we're going to look at is the cash flow coverage ratio. And this ratio is calculated by dividing the organization's unrestricted cash by its monthly operating expenses. It's ideal to have 3 to 6 months of runway in the event that there is an unexpected reduction in revenues, or perhaps a delay in receiving revenues from one of your funding organizations. In the example on the slide, cash is sufficient to cover 1.5 months of expenses, and this is very low. So we would recommend to this organization that they take measures to increase their cash reserves, and this in turn will improve its resilience. The next KPI is the operating reserve ratio. And this ratio is calculated by dividing the unrestricted net assets, and I would include any existing operating reserves in that amount, of the organization by the average monthly operating costs over a 12-month period. Monitoring this ratio helps to ensure the financial sustainability of the organization and to prepare for significant adverse circumstances. It also helps to answer questions such as how long you can sustain operations without revenues and your level of preparedness if there were a financial crisis. And the last KPI we're looking at is the budget versus actual variance. This is another effective means of financial monitoring, and it involves comparing the organization's revenues and expenses to the budgeted revenues and expenses during the fiscal year, and to understand reasons for any significant variances. Many organizations set a percentage threshold, such as 15%, as well as a dollar threshold, and variances in excess of the thresholds are investigated. In the example on the slide, office supplies expenses exceeded the budgeted amount by 30%, which is higher than the threshold of 15% that's been set by the organization. And this was flagged for investigation. So regular monitoring of the financial results helps organizations identify trends and red flags, the impact of internal and external changes, and to make appropriate and timely decisions. We're now switching to the topic of cash flow calendars and how this tool can help you monitor and manage the cash flows of your organization. So a cash flow calendar shows a month-by-month view of expected cash inflows and outflows and the projected cash balance at the end of the month. It includes cash flows from operations and investments, such as the purchase of capital assets or perhaps investments that you may be making in GICs or term deposits, and as well as financing activities. And by looking ahead, an organization can identify any red flags and take steps to avoid cash shortages. We're now going to look at what needs to be included in a cash flow calendar. So it should include confirmed grant receipts, and grant agreements are often a helpful source of information for the timing of grant receipts, because they typically do specify when the funder is going to send the funds to the organization and whether it's going to be in a lump sum payment or perhaps in installment payments. The timing of payments for regular expenses such as payroll, rent, insurance, and subscriptions are usually predictable, but some judgment will be needed to estimate the timing of program and capital asset purchases. Don't forget to include cash receipts and payments for fundraising and seasonal events, and consider the timing of payment of expenses that are typically paid in full at the beginning of the service period. It's useful to build the cash flow calendar in tandem with the annual budgeting process, but I would also recommend maintaining it on a rolling 12-month basis and updating it for any changes in your business. And I'm now going to hand back to Omar for our next segment.
Thank you, Shirley. That was a great overview of how to identify the problems and what good, bad may look like, where the warning signs may be. Let's now switch gears and talk about how you can go about taking proactive operational measures to ensure that you keep those metrics looking good or improving those metrics. So first of all, in terms of plugging the leaks, you want to look for hidden expenses. We've said this before in previous webinars, and we continue to see it in our client base, but duplicate costs, often software tools that do the same things, software tools that are unused, perhaps it's an excess number of seats in a software tool. The other matter is missed opportunities for annual discounts. Many tools, many service providers will provide an annual discount for prepayment, for instance. Small leaks can create large budget gaps. And so generally speaking, when we speak to our not-for-profit clients, we find they have a pretty good command of the numbers overall, what's coming in, what's going out, sort of in their head. But they often don't think of the small leaks, the little things. And then a third item here is annual contract renewals. These need to be monitored closely. It's very important that you have a log of these things so that you know in advance when a contract is about to renew. Again, the theme remains small fixes lead to big wins. Can you consolidate software tools? Set vendor review dates, build a system for this. In its simplest form, have all of your contract renewal dates on one sheet, and have clarity on what the renewal date is and reach out to the vendor 2 months in advance for a conversation on what next year's cost will look like. And at that point, look around, look for other vendors, see how you can negotiate with current vendors. Of course, cancel unused services and use technology to build efficiency. We just did a webinar in May on the use of AI and how that can help you. Are there opportunities to really streamline your grant writing process, for instance? So the summer months are upon us. This is often a time when organizations have a little bit of downtime. This would be a good opportunity to really think about these small costs that you might be facing on an ongoing basis that, could be open to review or change. And we would also suggest this is a good opportunity to build the processes if you don't have the processes in place to review these costs on an ongoing basis. Next, switching gears, but this is an important one, is it's building a culture of accountability. This is often something that goes ignored. It's something that we are often uncomfortable dealing with because it leads to frank discussions about people's roles and accountability. It's important to remember that building a culture of accountability is not about micromanagement. It's really about visibility. You need clarity in roles from requester, approver, bookkeeper, executive director, who's doing what in different areas of finance. You might want to consider using what's called the RACI metrics. RACI stands for responsible, accountable, consulted, and informed. So what do these different roles mean? Well, the person responsible is the person who does the work, and there can be multiple people responsible. The accountable person is the person who owns the outcome and ultimately signs off. There should only be one accountable person for each task. Next, we have consulted parties, and these are the people you would seek input for or expertise from before making a decision. And finally, the informed are the people you would these are the people that you would advise of once the decision is made, and once action has been taken. So by mapping tasks or decisions using this framework, you reduce confusion, clarify who does what, avoid duplicated efforts, and ultimately avoid dropped balls. Automating the boring stuff. So again, this is something that we've mentioned to you in the past, but we want to emphasize it because there is a huge opportunity for not-for-profit organizations to improve operational efficiency using technology, particularly in the accounting function. So using QuickBooks Online, the automated bank feeds, the opportunity for more efficient reconciliations, using DEXT, optical character recognition technology to avoid manual data entry, Pluto for efficiency in bill payments and approvals, and then other approval software like Approval Max, which includes different workflow layers. Let's move on to the next polling question. What best describes your organization's current use of technology for managing expenses? 1, we use dedicated tools like QuickBooks, Dext, Pluto, and have automated workflows. 2, we use some software, but much of the process is still manual. 3, we primarily rely on spreadsheets and manual processes. And 4, we are exploring tools, but haven't implemented anything yet. Let's see what you have to say here. All right, so we have 30% of the audience saying we use dedicated tools, QuickBooks Online, Dext, and Pluto. 46% saying we use some software, but much of the process is still manual. 20% saying we rely primarily on spreadsheets and manual processes, and 3% saying we are exploring tools but haven't implemented anything yet. So this shows there is a significant opportunity for improvement. If you can think about amongst this crowd the number of hours that could be saved, the number of hours that could be redeployed back towards our mission, the impact that we could have on the sector overall would be tremendous. Let's continue. So we're going to, before we end, spend a little bit of time talking about governance. Governance and transparency with your board. As we've covered in the past, your board's job is oversight, not management. And making sure that there's clarity in that is very important. If you are an executive director, we strongly suggest that you build a one-page monthly dashboard that provides key information, cash on hand, key ratios, reserves, cash flow coverage, days cash on hand, the information that you've seen today. And by the way, we will provide follow-up material and you will have access to this webinar. So you will be able to go back and recap those ratios that Shirley covered. Budget versus actual variances, funding gaps or major upcoming costs. Financials must be explained in plain language. It's important that this is done so that everybody can be aligned, regardless of their level of sophistication with financial statements. And finally, discussing possible budgetary shortfalls and reviewing scenarios in advance. Let's go to our final polling question for today. How confident are you that your board fully understands your current financial position? The first is very confident. We have strong reporting and transparency. Second, somewhat confident. We share updates, but not always in plain language. Third, not confident. Reporting is minimal or unclear. And fourth, we don't currently engage our board in this level of detail. Let's see what you have to say. Okay, so 45% of you said very confident. We have strong reporting and transparency. That is phenomenal to hear. 37% said somewhat confident. We share updates, but not always in plain language. 15% said not confident. Reporting is minimal or unclear. And finally, 3% said we don't currently engage our board in this level of detail. So some positive signs here, but definitely opportunities for improvement. And this can be achieved. It is very possible to make small changes where you can see significant improvement. To wrap this up, let's talk about building trust through transparency. A few important recommendations here. One, reports should be delivered ahead of meetings. There are many times that I've heard from board members this problem of receiving reports right before the board meeting is about to start. It doesn't provide any opportunity for thought and review of what has happened so that the board can ask thoughtful questions in the meetings. Notes are helpful. Notes help to contextualize the numbers. We recommend looking at variances, and the percentage change will vary based on your organization and the amount of fluctuation, but it's always helpful to provide notes to contextualize the numbers and highlight the variances. Issues should be accompanied by a proposed action plan. So when you meet to review the numbers, it's important that you have some preliminary highlights on the issues, you're flagging the issues, and some thoughts on what can be done. Because ultimately, when board members trust the data, they support bold decisions. So you can get into this mode of using your time with your board to leverage their expertise, to gain their support, trust, and approval to move the organization forward. To summarize your first 3 actions, like I said earlier, the summer months are coming up. Many of you will have downtime. Please think about your finances. Talk to your bookkeeper, to your fractional controller or CFO. Build your cash flow calendar. Secondly, audit your spending for quick wins. Think through each line and dig into details. Engage your teams as you do this. And third, improve your reporting processes. Create that one-page dashboard and deliver material to your board early. All of this will really help to bring greater clarity, transparency to what is happening from a finance perspective, from an expense and cash flow perspective in your organization, which will make meaningful change. And finally, financial governance and efficiency review. This is a new service that we're offering to the community today. This will really help you address and start to recognize a lot of the items that we've covered today. We recognize that financial expertise varies across different organizations, and this can really help to give you a little bit of a kickstart and put you on that journey towards better transparency, better clarity. So what this engagement would include is support for stronger board oversight, improved accountability, and it will help you uncover cost savings. Specifically, we will analyze financial reporting and board package structure for clarity and impact. So I was talking about that one-page dashboard. We would help you understand where you're falling short today and how you can go about building that dashboard. Secondly, reviewing current approval workflows, spending roles, and accountability gaps. So going back to that RACI matrix, helping you understand where the challenges are and what the opportunities might be. Assessing opportunities to reduce costs in areas such as duplicate tools, unused subscriptions, manual processes. Identifying red flags in budget versus actuals and suggesting corrective action, also helping you understand the best method of communicating these challenges and these concerns. This will all include a 90-minute consultation and a tailored 2-page report with key findings and actionable recommendations for leadership and the board. So again, an opportunity to really start you on that journey of really creating that dialogue around the numbers. Now, this service comes at a one-time fee of $1,995, And this fee will actually be credited to you if you, after this engagement, decide to engage us for ongoing services. So really a great opportunity to start thinking about moving the organization forward from a financial clarity and governance perspective. All right, time for the Q&A. Ravi, can you lead us through this?
Yeah, absolutely. Yeah. Thank you so much for that, Omar and Shirley. That was great. We do have a few questions. Why don't we start with going back to the cash flow calendar? There were a few questions there. So the first one was, as an NPO, a big portion of donations are restricted. This can result in higher restricted cash as compared to unrestricted cash. Are there any suggestions that we can provide to correct this imbalance?
I'm sure I can speak to that one. So many organizations will launch fundraising campaigns, and these may not be specific to any particular program or a capital campaign. It may just be sort of an annual event, which is a fundraiser just towards the general operations of an organization. Also do have many clients that have applied for foundation grants. And many of these are, again, not restricted to any particular programs. There may also be opportunities to earn sort of fee for service revenue when you think of the types of services that you could be offering to the community. There may be participants that are willing to pay for those services. But those are just some examples of perhaps other types of revenues that you could explore if you don't have those revenues.
Excellent. Thank you, Shirley.
Just to add to that, fee for service is an interesting one. I was talking to an executive director just yesterday who was explaining that just out of fee for service revenue, they're able to cover their own salary. And so it can be something that you can add on to existing operations, and that can have a significant impact. Also remember that our busiest giving months of the year are ahead of us still, and this would be a great opportunity to start planning for those campaigns. Again, if you have downtime this summer, think about what you can do creatively. It is going to be a tight giving season this year again. You're going to be competing with others for donor dollars. Get ahead of that would be my advice there.
Excellent. And then another cash flow calendar question here. This is quite specific to the monthly operating costs. So does the average monthly operating cost include fund development costs and general thinking around fund development costs there?
I would say yes. I think those general operating costs. Well, having said that, if those fund development expenses are sort of a larger sort of one-off type expense, then you perhaps don't want to include it. But if you feel it's sort of part of your regular focus and what you're going to be continuing to do in the foreseeable future, then I would actually include those costs in those monthly operating costs, and therefore it's taken into consideration in the calculation of the KPI.
Fantastic. Thank you for that, Shirley. Just moving on to some of the tools. I know we covered the use of tools and how they make the accounting system much more efficient. And maybe this is Omar's area here, but generally speaking, can we get some more information about Dext, QBO, and Pluto? Any kind of advice on that technology stack?
Yeah, I can tell you a little bit more about how these tools help. We also have a lot of information on our website about this, or we're happy to have a call with you to actually help you understand how these tools could help you and how we might be able to implement them for you. Ultimately, QuickBooks Online versus desktop software has many integrated applications, which can allow you to bring data into the system in a much more efficient and effective way. It allows for bank data to come into the file, to your accounting file automatically, rather than having to worry about uploads. There is to a greater degree, and it's still evolving, but there are AI capabilities coming into accounting software that are effectively helping to automate certain processes. Dext is a really excellent system for expense capture. And what I mean by that is you put a receipt into it, it actually does a lot of the data entry for you. Through technology called optical character recognition. It's also very intelligent. It learns your coding patterns. And so it not only improves efficiency because it reduces the amount of manual data entry required, but it also improves the accuracy quite considerably. Pluto, I'm very fond of because early days of starting Enkel, there's a case study about this somewhere out there. I learned of a lot of organizations driving checks around town. So driving checks to, for dual signature, and Pluto effectively automates that process. So every approver gets one email with everything that they need to approve with all of the attachments. It helps a lot from that perspective.
Excellent, thank you. This is a really great question, actually, that we've had here. And can we recommend any tools specifically for tracking cash flow besides Excel? So getting away from the sort of manual way of doing it, specifically for cash flow, anything there?
Yeah, there are tools out there, and we do use tools to facilitate this. There's Fathom, there's Float. Float is specifically designed for cash flow. The only caveat that I'll mention is the data is only as good, that the output is only as good as the data inside of your accounting file is. So if your accounting records are not up to date, it will not give you an accurate picture of what is working. That is why the manual cash flow calendar, it's like a sort of something that can be updated quite easily without having to look at your accounting records. Now, of course, there is the risk with the cash flow calendar that you could be missing things. So if you are really on top of your accounting records, then by all means, look at a tool like Float.
It's great advice. Thank you, Omar. Another question here around kind of the organization's board and reporting to the board. So are there any dashboard templates available? Can you recommend any that could be used to automate some of the reporting to board?
Yeah, we don't have one that is kind of templated ready to go. And I would say there's always a little bit of customization required to these dashboards. I think if you started with the ratios that Shirley provided today, that Shirley shared today, and if you also went back to our January 30th webinar, where we specifically covered metrics and KPIs, you could pull from there. Between those two resources, I think you'd have a good starting point. Shirley, anything to add there?
Mm-hmm. Yes, that's right. At some organizations will use reporting tools that sort of sit on top of or draw information from the accounting software. And you can sort of customize within the tools the the metrics that you want to be seeing in those reports each month. And so that's really great because you can sort of set it up once and then it will report on that information for you going forward.
Yeah, and surely you and the CFO and controller team I know are using Spotlight, which can be used to somewhat automate that process once the books are done every month. So we are able to assist with that through our controllership and CFO services.
Fantastic, thank you. And quite a specific question here around approvals. So how do you manage managerial approvals for invoices with these tools? What are the mechanisms in place for those approvals?
So let me maybe start with this, and Shirley, perhaps you can add to this. But there's often two parts to the approval process, and I'm not sure if this is going to answer the question. But the first part is the expense approval. So approving the expense before the money is spent, but then also approving the payment before the funds are dispersed. And those are often two different people. And the first one can be facilitated through PO system or through something like Dext. The second one can be facilitated through Pluto. Shirley, anything to add there?
Yes, I think tools like Approval Max are also play a role in that process as well. So it can ensure that you're approving the purchase before it's made, then you're actually approving the invoice before it gets submitted for payment. And then during the payment stage, tools such as Pluto, one will sort of set up the approval rules within the software. And it includes specifying, exactly which individuals need to approve and how many of those individuals, and the different monetary sort of levels. So for example, I might be set up as an approver, but I can only approve for payments up to say $1,000, and thereafter Omar needs to, and a board member perhaps need to approve or something like that. So there's great flexibility with how you set up those different approval rules, and it generally works very well.
Shirley, actually, that got me thinking about a project I know that you did around financial policies. A lot of organizations don't have formal financial policies. Any suggestion there of sort of a baseline of policy that organizations should have, or if, established approval limits are not in place, what would you suggest that an organization does? Where should they start?
Well, typically organizations, and of course financial institutions such as your banks or credit unions, will require you to designate certain check signatories or those that are authorized to conduct banking transactions. So that's sort of the very basic level that's in place. But often I think what's really missed is that the real beginning of the process, which I think you mentioned, Omar, is around what is the first stage of approval, and usually that's before any sort of significant purchase is made. Obviously for regular things like paying for your electricity and utilities and so forth, those are sort of regular recurring expenses that one may not seek special approval for, but there certainly may be other costs that where you really do want to have that approval in place right up front. And thereafter, it's reviewing vendor invoices and so forth as they come in. And then, of course, obviously, finally, those payments. So it's really looking more fulsomely at the whole sort of purchasing and payment cycle, and making sure that you've got the appropriate controls in place from start to finish.
And documenting controls, is that something that every organization has to have?
It's highly recommended, and certainly for those organizations that undergo an audit, it's definitely something that is very, very helpful to your auditors, because they're required to get an understanding of your processes and internal controls for all of your really significant items that you see on the financial statements. And so typically a finance manual or financial policies and procedures are an area where this is documented, and some policies may even exist at the board level.
Right. Ravi?
Excellent. Yeah. So I've had a couple of questions here around continued board reporting to make that a bit smoother. And I guess these two questions could be folded into one here. So somebody said here that I believe that for the board to trust us when we present them with the financial statements, they must first be able to understand certain key information. What is the key information to communicate to them? And is it possible to kind of automate that into a table to make it really clear and effective?
So the automation part is possible, but surely perhaps you could speak to this. You have a lot of experience working with boards and having been on boards and finance committees.
Well, I think it's really important that boards really understand all of those key elements within your financial statement. So when you think about your statement of financial position, it's your assets, your liabilities, and your net assets. Your net assets representing the assets less the liabilities. So of course, most boards will understand sort of fairly fundamental elements of it, such as cash, perhaps accounts receivable and accounts payable. But thereafter, sometimes I do find those gaps in understanding. Sometimes it's around, well, what are my net assets actually? And what are the different components of the net assets? They may not understand why you have certain accrued liabilities recorded as well. And then, of course, on the other side are the revenues and the expenses that you're incurring. And for them really to understand how you go about recording revenues and your accounting policies that support the recording of the revenues, as well as your expenses. As you know, the accounting standards require other than a cash basis of accounting for your accounting records. So sometimes, that gap between the two different methods that you use need to be bridged and understood well by board members. So I would really sort of start with really an open and honest conversation with your board as they look at your financial statements, and just ask them, what elements of the financial statements do you not understand? What can we clarify for you? What further information can we provide to you? So I mentioned accrued liabilities, for example, maybe providing them with a schedule to just sort of identify what the composition is of that balance, and perhaps other balances as well, could really help them. Deferred revenue is also often a significant number on your balance sheet for not-for-profits that use the deferral method of accounting. So actually walking through the composition of that balance could be very helpful for them.
Great.
Excellent. Last final questions, but we're getting towards time here, but I think there's one or two questions left here. So annual operating costs, Shelley. I've heard non-profits should have between 1 and 3 years worth of annual operating costs in the bank. Is that considered normal?
Oh, I'm sure many not-for-profits would love to have that amount of cash in their bank account. It's typically not what we see. As I say, we tend to look at that range of 3 to 6 months as sort of being something to strive for, actually, for most not-for-profit organizations. But I would say that that's sort of ideal, unless, of course, you are, again, foreseeing any sort of headwinds that, but again, there needs to be that opportunity then to take the actions that you need to, if you are seeing any sort of adverse circumstances on the horizon.
Shirley, I wonder if there might be a misconception here. That's unrestricted, correct? Unrestricted cash, 3 to 6 months?
I'm just having a look at the question. It's annual operating costs. I think it would be everything. So you're wanting to make sure that you're really able to cover all of your costs. Yes.
Yeah. Okay.
So yeah,
3 to 6 months.
The 1 and 3 years is be fantastic if you could reach that goal. But I definitely don't see that as being the norm.
Excellent. Thank you, Shelley. Let's get towards the final question here. So this is slightly unrelated to some of the topics we've been talking about here, but one worth asking nonetheless. We've been hunting for a CPA to join our board unsuccessfully. Any thoughts on how to recruit a CPA for the board?
Oh, yeah, I'm happy to share my thoughts on that one. So I would say, firstly, use your network. If you're an executive director, you may well have a network of executive directors of other organizations. So definitely reach out, ask if they are aware of any CPAs that may have an interest in serving on your board. The other one is just reach out to the CPA Institute in the province in which you're located, because they typically have job boards, not just for jobs, but also for volunteer positions on boards. So I think that could be really helpful to you as well. The other option, if you're willing to perhaps pay a little bit for a service, is to reach out to a recruiter. and they can try and source a suitable candidate or an option of candidates for you.
Excellent, thank you. And thank you everybody for your questions. We are reaching time. We did have a couple of other questions. Once again, this deck is going to be shared with everybody, I believe tomorrow. And if there are questions still outstanding, you can contact us directly and we'll be very, very happy to answer them. Thanks for your questions, everyone. Just moving on to the final slide. So we have actually made a free guide available to everybody that's attended. So please do go ahead and download that. The information is here, and also there is a link in the chat to the download. It's on the topics that we've spoken about today. So cash flow clarity. It's a practical guide to strengthening financial health in Canadian nonprofits. I do encourage everybody to go and download that today, so you have that. And once again, we are sharing, and Charity Village will be sharing the deck here tomorrow. Thank you all so much for attending today. I'm going to pass it back over to Charity Village to take it from here.
Wonderful. Thank you very much. I just wanted to remind everyone that you will receive a follow-up email tomorrow with a link to the webinar recording. Please feel free to share this link with your colleagues. The email will also include a survey link that you can fill out with your feedback on today's webinar. You should see a survey link pop up right here in Zoom following the session as well. On behalf of Charity Village, thank you so much for joining us today. I hope you'll join us for our next free webinar, Sustaining Revenue and Navigating Tariff Impacts in Canada, a practical guide for nonprofits. You can find more information on this and all of our upcoming webinars at charityvillage.com/webinars. Thanks again for joining us. I hope that you enjoy the rest of your day.